Welcome to readtheticker.com. Monthly timing, the big picture. In short, this leads your investigation. No matter whether you're a 1 minute trader, 60-minute trader, 180-minute trader, daily trader, weekly trader, in the end, you want the monthly bar to show a move that will represent your gains and profits. Let's take a look at an example. Here we have the SPY monthly chart. Red bars are low closes for the month. Blue bars are high closes for the month. Now you may just look at this chart and say, well, I'm going to buy all the red closes when the trend is up, and I'm going to short all the blue closes when the trend is down. You look at a lot of charts. Once again, the price action and the bar range and all the patterns will throw off that investigation because you're really only looking at bars and you get confused with different ranges and everything. Look at 30, 40 charts, you're going, oh yeah, this is getting a bit boring. An easy way to do it is use the indicator to quickly show you whether a red or a blue bar in a trend suits your position analysis. First we have the standard RSI, which is a 14 period, which is, allows you to see divergences, when to go long, when to go short. Obviously, you don't get divergence and the RSI trends down. That's a short period. We didn't actually get much of a divergence here, but we get RSI trends up. The risk of a divergence in this area here, as you can see these two peaks here, risk of divergence. It was broken here. But pretty much trends up, as you know, with the price action trend. So the copy-cop curve and the RSI are both a comparison of rate of change of the underlying or the SPY. As you can see with the copy-cop curve, it's a setting of 211, a very fine setting. All the wiggles in the copy-cop curve black line pretty much mirror the RSI 14 period. So what the copy-cop curve does, it is a looking at the trees where the RSI is looking at the forest. So it sort of highlights a lot closely the red and blue bar action. So obviously here we have a strong trend. The copy-cop curve, when it pulls back, hits the zero line, which pretty much represents only one red month pullback. You get two red month pullbacks. The copy-cop curve dives deeper into the red zone. You get 4 or 5 months pullback. The copy-cop curve dives very deep into the red zone. And you get a lot of blue months going up. The copy-cop curve stays above the red into the green zone. And depending on how fast it goes, obviously the copy-cop curve will scream up high into the green zone. So, like I said before, it's pretty much a focus. If you're looking down 30 charts, you want to see, show me the copy-cop curves with the black lines on zero and are not going too deep into the red line. And obviously relative strength, if you've got a situation where you've got the main index of the SPY smashing into the red zone, you want to look at charts where the black line has not so much gone down in the red zone, so that's a strong relative strength stock relative to the main indexes, or the Wyckoff wave, or what have you. So what this does, it allows you, in other charts, I think in the volume wave chart, and when you do the flash charts, you set up this type of presentation, and you just roll down many charts to say, show me the charts where the copy-cop curve is only retrenched to the zero line, where the index may or may not have gone deeper or further, so you get a relative strength analysis. And it shows you pretty quickly that, for example, at this excuse me, this current point of time, you should be looking for a buy zone if the sell-off does not go too deep. Because we have had, we've really pretty much enjoyed nice little dips where we get a dip and we get a 3 to 4 month rally upwards. Obviously, you must wonder how long it's going to go for. So as you can see, we're setting up again. As you can notice, we've don't really have strong divergence, but we have a very overbought condition. So if you're talking about a long-term investment, I'd be very concerned. The best buying zone when it's pretty much overbought like that. So you don't really want to see divergence up there. We have to be aware that it most likely happened. For example, here we had divergence down here. We were looking at a pullback here, 2 month pullback. The red zone we brought up, and the divergence held true here. Pretty much this chart would have sent a massive warning signal. Obviously going short. The RSI will tell you whether to go short or not, apart from the lower lows and the lower highs. It just confirms, once again, when you look at many charts, where is the red and blue bar and how does it fit to compare mini charts with the copy curve and the RSI to go long or short. I found this tool to be very handy, especially when you're looking at buying your dip opportunities, or when you're in a situation where the price action has moved very fast against you. For example, here is this red bar down here. This is the flash crash, where the red bar actually takes out the 3 prior closes of 3 up bars. So as you can see, the copy curve measures rate of change, shows a very deep penetration into the red zone. So you really have to wait for the price action to repair itself and let the black line go near the 0 line before you actually get a chance of taking a long position. Once again, here we had a very deep smash down of the red bars, which took out many months of up bars. As you can see, the rate of change indicate pretty much copy curve rate of change smashes into the red zone. You need time to repair. This is the first month of repair, and as you see, you give you a perfect little weak month here, and pretty much was off to the races after that. So sharp down moves does require a period of time for price action to repair, and you can measure whether the repairing has been completed on how well the black line of the copy curve shoots up and holds above the 0 line or in the green area. Once again, you can use your RSI to confirm your copy curve 211 indicator. For example, here's the repairing time. Here's the repairing time. Okay, so for example here, they were hoping for a repair time, but as you can, the fundamentals of what was going on at the time, this bar turned up and pretty much destroyed any chance of repair. Obviously, there's the bottom of the low. We had a very strong blue bar there, which sent the copy curve screaming above the 0 line. But as you can see, the RSI is still down by the minus 20 area. But you would really have to start paying attention here. And quite frankly, that was the first round of money, probably short covering the first 3 bars off the 2009 low. Here was the pause, because here was resistance, and as you know, there was a little head and shoulders in there. And this is the month here. That's the month there where everything took off and the big money started loading up on. So I suggest you study the monthly data with the copy curve 211 and the RSI. It just gives you an idea where to start hunting for your lower time frame price patterns. I would be looking here. For example, right now I'm looking at, I've got a dip in the major indexes. Dip in the major indexes for show me for the month. I'll be looking for little cause patterns in my favorite Wyckoff charts. I'll be looking for my market leaders, my relative strength stocks. I'll be looking forward to take advantage of that. Thanks for watching.